And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Thursday, June the 23rd. Welcome, friends, family, and fellow futures traders. My name's John Hoagland. Thanks for trusting me with your time. As always, our focus here is on seeking accurate context in the markets, always thinking about risk management, and remaining patient. Today is Detroit-style pizza day, in case you didn't know. As far as economic numbers are concerned, we had the jobless claims come out. The initial jobless claims were looking for 229,000, actually 227,000. 229,000 was last week's, and that's what this week's came out, 229,000. Although they did adjust last week's number a little bit higher at 231,000. So no big jumps or changes as far as jobless claims are concerned. Continuing jobless claims, they were looking for 1,315,000, and that's exactly what they got. We're still waiting for 845 Central PMI composite preliminary. That might be something that we will be paying attention to, of course. 9 o'clock, Chairman Powell speaks in front of the Senate again. Nat gas, the EIA nat gas number is due out at 9:30. However, the petroleum status report by the EIA has been delayed. The website is citing system issues. Thank you to Kevin Laffey for the email this morning. He's the one that alerted me to that. So thank you again, Kevin, for that. As far as what's going on in the world today, U.S. stocks are set to open higher early today as Chairman Powell readies for his second day in Congress. Of course, we all know his focus is going to remain on inflation and potential recession. Monetary tightening continues around the world. Norway has raised their rate by 50 basis points today. European natural gas futures hit a 3-month high. Germany is considering moving into a rationing stance as far as natural gas is concerned. And crude prices are steadied after a surprise boost by the API last night, a boost of 5.6 million barrels in inventory here in the U.S. The EIA, again, that release delayed. I have no idea when that's going to come out, so we'll have to just keep our eyes peeled for that if we're trading crude oil today. It would be nice if they did give us some kind of warning, but who knows what's going to happen. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling are always welcome, as well as love here on the market forecast. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. The VIX up slightly this morning at 29.11. Dollar index also up slightly at 104.52. And the yield on the 10-year continues to slip lower, 3.09%. Last I checked. Good morning to everybody. It is Make Hoag Money Day today. Here is a link so you can get registered and join us. Looking forward to hearing your ideas and thoughts in the markets this morning. See if we can't make a few shekels. Good morning, chillin' with Dylan. First in the room, you win the prize. Scott saw and he conquered. Charles March, Brian Tachyon, Theo. Good morning. JST Wave, Shaw. Good morning, Vietnam. Good morning, Brody. Terry King, Bill Phillips, Glitter Sandwich, Denise, Vince. Good morning, James, Dan Trader. Jerry is awake. Boy, I sure hope I am too. I didn't sleep all that well last night. I got this thing going with my hand. My hand is aching all night, so had me up a little bit, so I'm a little bit tired, maybe a little bit slow today. I just have to remember that, and remember I'm probably more likely to make emotional decisions because of that. France, good morning. Dimitar, good morning to you. Colonel Blake Stone, good morning. thank you very much. I'm glad that you are enjoying it. Thanks for watching it every day. That's wonderful. And my only hope is that in some way you're learning something and improving your performance in some way. I really appreciate the comment there, Colonel Blake. Thank you very much. Scott Masking Duct, good morning to you. Marcelo, my brother Rick is here this morning. Good morning, Rick. There was somebody who was asking about the picture that actually this is on loan from my brother. There's actually two of them, but there was somebody that was asking if I knew somebody. Who was that? That was Nick Sidaro. Nick Sidaro, my brother's here. If you want to ask him if he knew the person you were asking about yesterday, because Rick was in the 30-year bond pit for quite a while. Trading Research, good morning, Sarah Hall. Good morning to you, and prayers and love to you as well. Dan Trader, Verizon was having network issues in the New York tri-state area this morning. Maybe that's it. But apparently they're still going to be able to announce the natural gas number. That's still on the docket. So I don't know. We'll have to see what happens there. Maybe a little odd, right? Isaac, good morning. Rob T, Dan Trader. Thanks for pointing out the likes. That does help us in our algorithm or whatever that is on YouTube. I don't really pay that much attention to it. My goal is you guys. Good morning, Nick Sidoro. Yeah, you can ask my brother Rick if he knows the guy you mentioned yesterday. I don't remember the name, but I Print Money. Love that name. Patrick, good morning. Grim Reaper Trader, good morning. Getting my new AC put in. Good day yesterday. Well, that's good. Man, that is a good day if you can put in a new AC unit on a day after trading. That's a pretty good day. Good morning, even if it's 1400 here in Europe. Good to see you, Giuliano. Thanks for being here. Anissa, good morning. Nick. There you go, Rick. We're asking if you know Joel Schackenberg. He worked for Merrill Lynch as a broker and later started SSS Commodities. We'll see if Rick knows him. Dr. VJ, good morning. Equanimous Trading, good morning from Lombard, where the cat woke us up at 4 a.m. Is Rick still trading bonds? I don't know how much he's trading bonds. He's trading from home like all of us these days. And I know he likes to trade the equities. He likes to trade the metals. He's been dabbling in the metals quite a bit and kind of looking at some individual day trades in stocks. Schnackenberg. Sammy watched the movie Floored about Chicago Futures Exchange. Very informative. Yeah, the gentleman with the very colorful trading jacket, Rob Prosnewski, he stood about 5 feet from me. You can catch glimpses of me in that movie, like in the background. Rob is a really, really good guy. His brother Steve was a really, really good guy. They were good traders. And it was really just, about the end of an era with the trading floor and the activity moving from the floor onto the electronic trading. And good morning, Joe Drennan. Good to see you. Yeah, it was a large pit, wasn't it, Rick? I mean, you could be in the same room with somebody for years and really have no contact with them. But thanks for chiming in. All right, so let's jump into the charts here. We've got Make Hogue Money today, so we're going to try and be done with the forecast here about 8:15. Give us 5 minutes to get into Make Hogue Money. Looking forward to another interesting, informative, fun session today in Make Hogue Money. All right, let's take a look. Okay, so the E-mini S&Ps. Earlier in the week, Sunday night, Monday night, thinking, all the time frames are telling us that this thing's going to go lower. That made me a little bit nervous. We've been putting up some upside days, but on low volume, and we really had no change in open interest in the S&Ps yesterday. If you were on for the recap yesterday, we talked about the fact that we've had a couple of P-shaped profiles. We did add open interest the day before yesterday. Yesterday, the open interest was largely just flat. So we're not seeing money coming into the market in either direction here. We're range bound, and if we are too short in multiple time frames, this consolidation, I think, is going to even up inventories. And as was pointed out yesterday, these consolidations can be confidence for continuation to the move lower. We don't know what's going to happen, so I'm going to be focusing on the extremes of this area of balance. We're really looking at last week's high is a little bit high. I like this 20% level here. Where is this? 38.46. A lot of folks have been focusing on 3,800, that big fat round number, which has been pretty decent. As far as resistance is concerned, we did add a little bit of volume yesterday. The volume in New York was actually pretty good yesterday, with over 5 billion traded. We've got an inside extended trading hour range so far today. Take a look at the 30-minute chart. So here's our inside extended trading hours and inside yesterday's regular trading hour range. We've got maybe some overnight inventory to the long side. We got a little push to the downside after the jobless claims numbers came out, but it's only pushing us back into value from yesterday. So in the time frame that I like to work, in the time frame that I like to day trade, opening in range and in value usually lets me sit back, relax, and look for opportunities as the day goes on. So the make hook money today, I'm probably not going to be in a big hurry to look for any opportunities. Now, we've had 2 days in a row where the opening range actually played out for us. We opted not to do it on Tuesday. Yesterday, opening range was the low of the session again. P-shaped profile indicates short covering, but we did add 14,000 in open interest on Tuesday. Wednesday, another P-shaped profile with no change in open interest. The market is really, I think, just kind of spending some time here to let people get in, let people get out. It's just an inventory adjustment period here, which range-bound activity tends to be. So we've got a little bit higher highs here. We've got a little bit higher lows. My tilt is to look for opportunities on weakness in the S&Ps today, but we do have Powell speaking. We're still waiting for that PMI composite flash, that preliminary PMI number coming out, which, you know, a lot of folks, it's an inflationary number if it comes out the wrong way. So I'm going to try and stay patient. Again, that happens at 8:45, so we will be in make hold money when that comes out. We'll see what kind of reactions and what kind of opportunities we can find in and around that. So again, you know, opening in range and in value, we're in balance from yesterday. We're in balance in even a medium time frame here. Last week's high, last week's low, the extremes of those. I'm going to try and stay patient today. I wish I had better information for you. I wish we had a late spike or some sort of gap or something like that, which would be more exciting to talk about. But it's all about the context, and when we're opening in value from the previous day, there's little change in the perception of value of the S&P contract right now. Settlement is down here, 37.6275. You might want to put that on your charts. If we do have some overnight longs here, this would be the terminus that would probably even them out, but it doesn't do much for us to look for opportunities. So be patient, trade what you see. I'm probably going to be waiting for extremes in the daytime frame today before really getting too engaged in anything here in the S&Ps. Here's the crude oil. All right, so we've got some structure to the downside here in medium time frame. Lower highs, lower lows. Put in a lower low yesterday. We did not close very well for continuation of the auction process to the downside, and we lost 6,600 in open interest yesterday. That's probably not indicative of a healthy downside auction. So it makes sense to me, technically, that we've got an inside day and extended trading hours. We had a boost in inventory by the API yesterday. We should probably be seeing price moving lower, but technically, maybe we're a little bit too short here. Again, we lost 6,600 in open interest yesterday, which would indicate long liquidation. Long liquidation takes selling power out of the marketplace. It takes initiative sellers out of the marketplace. Makes sense a little bit to me that we're looking back to the upside here today. And the fact that we had lots of overnight inventory to the short side. That overnight inventory was what pushed us back above the weekly kickoff high of $104. We settled at $106.19. We don't have any overnight inventory. We started to get too short. That's been now reconciled. We're in the middle, or we're in range and in value, but we do have an important inflection level with which to work right in the middle of that area of value from yesterday. My fear is that we're going to become magnetic as we wait for new information and just kind of span both sides of our weekly kickoff level, which, it can give you good trade location. It can give you opportunities to limit risk, but if it just kind of pops back and forth over and above, it can chop you up. So try and be careful in and around that weekly kickoff level for today. Again, it's a similar situation to the S&Ps. I mean, we did lose open interest yesterday. That's one thing. That open interest was probably more shorts covering than long liquidation. When we look at the volume during the regular trading hour session, most of the volume was there. We have delta congruent with direction, and somewhat of a P-shaped profile indicates short covering instead of long liquidation. It's the fact that we moved lower on the daily chart that makes it look like it was long liquidation. This almost looks more like short covering. Lots of conflicting information gives us cognitive dissonance. Wait for the opportunities, because we are opening in range and in value and at settlement. The perception of the value of a barrel of crude oil has not changed. Stay patient. Nasdaq. Let me get this kind of wonky here. So very similar to the S&Ps, similar yet different. Range bound. We did, I believe, have a change in open interest there. Yeah, we added 8,500 estimated open interest. I find that interesting. The Nasdaq added a pretty substantial amount of open interest on this kind of indecisive day, where the S&Ps did absolutely nothing as far as open interest is concerned. Got to remember that preliminary number is a stab at open interest. We won't know for sure what the number is until after about 9:30, when we can see the final on the bulletin. And sometimes there's a pretty serious miss. There was a pretty serious miss in the S&Ps last week or the week before. During rollover, it becomes even more difficult for the exchange to be able to come up with an accurate number. So that's why the final isn't out till after 9 or 9:30. So we did see a pickup in open interest yesterday in a non-directional type of day. Still range bound, building some energy with that increase in open interest. Did we have a divergence yesterday in delta or in the past couple of days? It would appear that we have. This is why I had this expanded. Now this is cumulative delta. This day we had a pretty big increase in buying, aggressive buying, but since then We've seen Delta moving lower as price has continued to move higher. We're seeing something similar to that in the S&Ps, which can indicate, especially with an additional 8,500 in open interest just yesterday, that we've found some longer time frame buyers here. We're not necessarily seeing it very clearly in the S&Ps, maybe so more clearly in the Nasdaq, but we're still range bound, and range bound rules will rule until something changes, until they don't anymore. So here's the 30-minute chart. P-shaped profile, opening range to the low of the session, opening range to the low of the session, P-shaped profile. Settlement is here, 11,565.75. We're opening in range and in value from yesterday. So again, I wish I had more exciting stuff to tell you, but it's going to be one of those hurry up and wait kind of days. When we open in range and in value, there's little change in the perception of value. Wait for better opportunities as the day goes on. We're not going to have a recap today because they've got the podcast going today, but check it out. Check out what happens by the end of the day. If we put in a high above where we open and we put in a low below where we open, then we've done a good job of waiting for the extremes to look for our opportunities, because again, very little change in the perception of value of the Nasdaq right now. And again, I wish I had more exciting stuff to tell you, but that's just the way it is right now. And again, in balance, in value, patience. Vince finally caught a gold trade. I'm thinking you were long above that opening range, which only ticked one tick below it. Nice job. Time to start drinking. No, I'm just kidding. All right. Gold, again, just not a lot to talk about here. It's still range bound, still short time frame control. Volume just really kind of drying up. We had a little spike in it yesterday. It looks like we may have some decent volume today, but just not impressive as far as volume is concerned. Open interest, we lost 800 yesterday. Not a big deal. This market is just range bound and bound for nothing. It's, if they were thirsty in Atlanta and there was beer in Texarkana, this thing's not going anywhere fast. This is not the Bandit. This is not the Snowman. This is the slow boat here. And I think kind of putting it on the back burner a little bit after that trade this morning, off that opening range, might be the call for gold. Here's the 30-minute. So yeah, we have a pretty decent opening range, which is the low of the session. We're continuing to unravel overnight inventory back towards settlement. But when we go back, we're just range bound, which is a good thing in one respect, because short time frame levels are likely to be respected. Look at last night. The previous night's low was the low there. It's up against a value low from whatever day this was here, from the 16th. All of these short time frame levels can provide opportunity. The problem with it is there's so many of them in range bound trade. You don't know which is the right one to take. So you take small losses. Finally, it gets to the level that you really want to take it. And by that time, hopefully you're not done for the day or upset or already taking stabs at making that money back in a fast fashion. Range bound, patience, wait for extremes. The range bound rules is you fade extremes, you sell against the high, you buy against the low, and you do that ad nauseum until it proves wrong. The breakout that we may see at some point here, I'm looking at last week's high and last week's low as the major extremes where the market is likely to break out and find some directional activity, and we're here right in the middle of it. Our little tennis player is mid-court, being a good little boy, waiting for the volley to come either to his right or to his left or to the upside or to the downside, and he's ready to run and pick up whatever side comes. But again, patience. We opened out of balance. We've closed the gap. What's the gap rules? Well, if we close the gap relatively early, that changes the fact that we might see this market continue to the downside. A quick gap close brings us to a potential value area special situation play, which this might be actually kind of exciting. We opened out of range and out of value from yesterday. If we accept back in value from yesterday, in other words, we've got to get back up above this value area low here, right about 1840. If we can get up there and we can accept, then there's a good probability that at some point during this session today, the market could trade to the other extreme of value, which puts us up here at around 1846. So that's a few shekels. 60 ticks. 46. Yeah, you could maybe get about 60 ticks on that. Problem is, what indicates acceptance? Usually time is the tool that I use for acceptance. I'm going to probably be looking for two 30-minute bars to close back above 1840 to mark a potential for acceptance of value from yesterday before looking for an opportunity for continuation up to value high. That's probably one of the more exciting opportunities we've seen here today because we did open out of balance and out of range. That puts the value area special situation play into possibility. Euro, same thing, same difference, no real big moves here. What did we do as far as open interest is concerned? We added 4,400. We've been adding a little bit of open interest in the euro, so that's a little bit encouraging for a potential move. But again, we're range-bound rules, fade the extremes, sell the high, buy the low, and do that ad nauseum until it fails. We've got an inside day and extended trading hours today. Dead volume. Volume has not been all that impressive. Well, let's take a look at the 30. So we did open with a gap. We've closed the gap. If the gap becomes accepted, the range from yesterday, we can see this market move back to the upside. We know we've got some overnight inventory to the short side. Settlements all the way up here at 106.33. Back in range. Maybe we get this push back up to value. Acceptance of value brings the value area special situation trade back to the value high, which puts us at the upper extreme of the balance area we're in, which would be a great out for longs and a possible short. All right. 10-year. Rates keep slipping to the downside. We keep pushing the 10-year higher. Good close yesterday. We closed above that weekly kickoff high, which is 116.25. And we're accepting higher pricing for now. Obviously, we can see that the market is accepting higher prices as it continues to push to the upside. How is the auction? Well, yesterday, on the breakout day, we did add a little bit of volume. It wasn't tremendous, but still it's an uptick in volume. We added 9,000 in open interest, which is really kind of almost inert in the 10-year because it is such a thick contract, but I'm just pleased that we did see an increase in open interest, which means money was coming in to the long side. Here's the 30-minute chart. Here's what we did. We opened, we pushed up above weekly kickoff high, and it's been support ever since. We had overnight longs that they got paid yesterday. Wonderful. Now we've got a move to the upside here. We've kind of reconciled back to the range from yesterday. I think we've got an opening range that's the low of the session today, which indicates potential buyers in control at the beginning of the day, which may last all day. Looks like that may be what's happening. The acceptance of price above this level through time yesterday has me looking for opportunities for longs today had I been trading the 10-year. And now to the natural gas. Day 3 in range. Volume and open interest have been not very gratuitous. We lost 9,300 in open interest yesterday. This market is waiting for new information. But again, we have to trade range-bound rules. Here's the 30. Range-bound rules. Anytime we get up to these highs, we're looking for shorts because we can limit risk. anytime we get down to these lows, we're looking for longs again because we can limit risk. Breaking out of this area of balance means acceptance first and then go with breakouts outside of balance. Look at last night. What a mess. What just an indecisive chop fest they had last night in the natural gas. Settlements up here, $6.87. Are we holding some shorts here? I don't really care because we're just in value and in range, in value. Patience. Look for opportunities at these extremes, whether it fades and comes back into the balance or breaks out and runs away from balance. Either one of them offer opportunities for some of your better trade locations. It's all about trade location, ladies and gentlemen. It's all about trade location because that's where we can limit our risk. Looking forward to seeing you all at Make Hogue Money. I see my good friend and trading partner Matt Hoyt is with us. Hopefully you're going to be with us for Make Hogue Money, and we'll see what you got to say. You know, in our equities, I think it's a hurry up and wait kind of a day in my time frame, Matt. I'm pretty sure in your time frame as well, but we're going to go check that out in just a couple of minutes. Thank you, as always, for joining me for Market Forecast. We'll do Make Hogue Money. That's going to be it for me for the day as far as content is concerned. We've got the podcast coming out at 3 o'clock with Dan Hodgman and Jack Pelzer, and we will look forward to hearing what they have to say. And then it's going to be Friday. So take your deep breath. Stay humble, grateful, and creative. Make sure you keep praying for world peace. Be good to yourself today. Be good to others. Looking forward to seeing you and Make Hogue Money. If I don't see you, get out there and profit today. Trade well, and we'll see you later. Make Hogue Money.